The US dollar had its weakest start to the year since 1973. But if the US dollar is losing, somebody or someone is gaining, and it is the euro in this case. And we will have to discuss why that is. Why is the Eurozone all of a sudden so strong? What are the main reasons? I've invited a fantastic guest to discuss. His name is Thomas Mayer. He's the former chief economist of the Deutsche Bank and the founding director of the Flossbach von Storch Research Institute. We will look at everything from a more European perspective today, and we have lots to discuss. The central banks are meeting in Sintra, Portugal this week, and we're hearing rumors about a tariff agreement between the EU and the US this morning as well. So lots to discuss and lots to really learn about. Before I switch over to my guest, though, hit that like and subscribe button. It helps us out tremendously, grow the channel, and bring fantastic guests like Thomas Mayer onto the program. So thanks so much for doing that. Now, Thomas, thank you so much for joining us here on Soar Financially. It's a pleasure to have you.
Well, thank you for the invitation.
Yeah, really looking forward to our conversation here, Thomas. As I mentioned in the intro, we have lots to discuss, and we'll do everything from a bit of a European perspective today. Usually our guests are US-based, or we often talk about the US economy from their perspective. Now let's look from Europe towards the US or into the world, and maybe we'll start with a very simple question, but what is your current assessment of the economic situation in the EU?
In aggregate, I would say slow growth. But when you dig a little bit deeper, it's interesting to see that Germany has stagnated now for 3 years, and there is some hope that this year the economy will show some signs of life. Whereas if you go to the south, you'll see buoyant growth, especially in Spain, 2.5%. So it is overall rather flattish, 0.5% or so for the Eurozone as a whole. But inside the Eurozone, there's quite a bit of a divergence.
Yeah, really interesting, because we have to talk about those growth drivers. Like, what makes you optimistic that all of a sudden Germany can turn the ship around? Let's break that down a little bit, because I think it's quite important. Germany is still the most important, or one of the most important industries or economies in the EU.
Yeah, right.
What makes you so hopeful?
I didn't say that I'm hopeful for Germany, but I think that at least we have a chance now to break out of the stagnation or this mini recession. Well, in terms of GDP growth, we could call it a mini recession, but for 3 years. Yeah? So you've lost a lot of output, and there are several reasons for that. There is the high energy prices. There is the reluctance of investors to grow their companies because of policy and insecurity, uncertainty, and a few factors have changed to the positive now. We have now a government that seems to be stable, and they have tabled some economic policies that at least should stimulate the demand side. They have a big investment booster rolled out, a large-scale borrowing scheme now in the making. And that should support the demand side of the economy. For that to turn into sustained growth, they need to undertake urgently supply-side reform, especially break free from the stranglehold of bureaucracy, which is intertwined between national and EU bureaucracy. That is still a longer run job, but at least in the short term, we'll get some demand stimulus from the expansionary fiscal policy. And that has already showed up in a bit of an improvement in sentiment indicators in the German economy.
It's interesting because you used the word sustainable or sustained growth. We're looking at the U.S. that pumped trillions of dollars into their economy, and it doesn't look like it's that sustainable. I'm curious, like, what is your take on that? What's the efficiency here?
Yeah, look, I'm not so much focusing on the demand side, but on the supply side. And when I look at the supply side of the U.S. economy, then I see fantastic productivity growth. And it's not just recent. Recently, productivity growth numbers have even been stronger, but this is a longer run phenomenon. When I look at the Eurozone in general and Germany in particular, I see zero productivity growth. In fact, in Germany, we have since 2017, we have a decline in productivity measured as value added per person employed. So in that sense, from the supply side, Europe, the Eurozone, Germany still looks lagging the US. From the demand side, we see a bit of a pickup, but for this demand side pickup to be sustained, you need to get the supply side up. And this means we need productivity improvement. It's all about productivity. The former Italian president, Draghi, even wrote a report last year about productivity in the Eurozone. This is the urgent job we have to do.
Where do you see that coming from? Like in the US, if I were to speculate, it's a lot of AI, technology stocks, technology improvements, just the AI or surgeons of AI. Where do you see growth coming from then, or productivity growth coming from in the EU and in Germany?
Well, I would say we haven't even seen AI productivity gains yet. What we are seeing here is the gains from the first stage of the internet revolution. I mean, the internet is not part of our life. It is a driver. It's an engine of the economy. And the US has been just far more advanced in adopting the internet. In Europe, we still lag behind. So the first step is actually digitalization. This is urgently needed. And then, of course, less bureaucracy. If you compare Europe to the US on these two counts, Europe is far behind. So there we need to do something, as was in fact outlined in the Draghi report on competitiveness and productivity.
Yeah, digitalization. If I go to the, our what do you call them, Behörden, government agencies, there's no digitization.
It's terrible. It's Kafkaesque, you would call it.
It's ridiculous, right? And in terms of productivity in Europe, I just heard a statistic, I think it was yesterday actually, that Germans take on average 15 sick days per year.
In fact, when you compare the annual working hours, Germany is, I think, together with Belgium, at the end of the league table, meaning that we work the least from all industrial countries, together with Belgium. And then when you add on that the real value added per employed person is not growing, you have an economy that is basically sort of reflecting a society of vacationers. That can't last. That has to change. And I think the new German government with Friedrich Merz is at least recognizing the problem. Whether they will come up with a solution is another question.
What is a possible solution, if it were to be cheeky and ask you that? But like, what is a possible solution? How you tell people not to take less sick days?
Well, they have to realize that we can't afford, as an economy, we can't afford this leisure culture that has taken place, especially since the pandemic. The pandemic has introduced the home office, and for some people, home office means basically I work only half days or so. So we have to, or the politicians basically have to tell people about the urgency of changing their habits. So we have to get up the weekly work hours. But there's another thing that we need to address, and this is the lifetime working time. Germans still go into pension at a relatively early age. It has been lifted, statutory lifted to 67, but still we have schemes for early retirement, 63 and so on. And we can't afford anymore to work so little. So this first thing is we have to improve the work ethic. The second thing is we have to really, really move ahead with digitalization, because this is where we're lagging behind. But this is also where technological progress takes place. And without technological progress, you don't get productivity growth.
One thing about bureaucracy, I saw an interview with an executive out of Berlin. I forgot what company he was with, but he was trying to hire a very high-ranking Netflix employee out of the US, and it's taken 6 months to get a work visa to get him to come across.
Yeah, it's
that
incredible.
Exactly what you're addressing?
Well, this is part of the problem. See, if you come to a German border and you ask for asylum, the chances are still pretty good, even though the government is trying to mitigate this process. The chances are pretty good that you are in Germany in no time. Basically, the moment you speak the word asylum, you're in. But if you're a professional and you want to contribute something to the economy, then you go through these loops of bureaucracy. It's incredible. I mean, we have a dynamic asylum immigration, but these are mostly people that are unskilled and are immigrating into the welfare system, which is very generous. By US standards, it's extremely generous, but even relative to the European Union, it's very generous. So many people just come to Germany to enjoy this wonderful welfare system, but they are not adding to GDP. But those who are adding to GDP, they have difficulties because of the bureaucracy.
This video is brought to you by Kodiak Copper, discovering tomorrow's copper today. Backed by major shareholders such as Tech Resources and a leadership team that includes Chairman Chris Taylor, famously known as the founder and CEO of Great Bear Resources, which was recently acquired by Kinross Gold for $1.8 billion, and President and CEO Claudia Tonquist's experience at Rio Tinto and Sandstorm, the company is well positioned and surrounded by historic and current producing mines in the prolific copper-gold belt of mining-friendly British Columbia. The company released a mineral resource estimate just last week, and it shows considerable scale with 4 zones of sizable copper-gold-rich mineralization. A pending update in Q4 2025 will include 3 additional zones. Mineralization is near surface, and with ongoing exploration, the goal is to expand the already extensive mineral resource. Kodiak Copper trades under the symbol KDK on the TSX Venture and KDKCF on the OTCQB. As always, do your own due diligence or consult your financial advisor before making any investment decisions. Now, let's jump back into the conversation. Yeah, it's frustrating to hear those stories, quite honestly, how difficult we make it for like industries we're still lacking. Like you touched on AI, for example, or the internet industry, like the hurdles that exist and the lack of capital to a degree in Europe as well, or in Germany in particular, for innovative sectors. How do we attract more capital to those sectors, those industries? What is your idea here?
I mean, we're not short on ideas, but quite frankly, there was another report by Enrico Letta. All these reports are date from 2024, so they are quite recent. This is on the completion of the internal market. That's a project that is basically in the making since the 1980s. It was supposed to be finished by 1992, but we realized that there are still a lot of internal barriers to trade in goods and services. And someone, if I recall correctly, I think the IMF that has calculated that this is equivalent to tremendous tariffs, I think in the neighborhood of 50%. The most urgent thing in order to allow technology companies to grow is to unify our capital market. We have 27 bankruptcy laws. We have 27 regulations of issuing shares. So if you're a startup, you despair. You might tick all the boxes in Germany, but then you want to go with your business to France and it starts all over again. So we have to complete this internal market. We have to complete the so-called capital market union. And we have, of course, then to come back, as I said, to instill a stronger work ethic in the population. And this requires that the chancellor in Germany and the leaders elsewhere say, look, people, we can't go on like this. We need to roll up our sleeves. Otherwise, we go down economically.
Yeah, and I think that's where we're trending. You were talking about 3 years of stagflation, more or less, and I would call it a recession. Right. Like we had no economic growth there. That's the definition of a recession, like textbook.
Absolutely, it's the longest recession in the history of the German economy.
But you touched. Yeah. No, you touch on something interesting because it's time to zoom out a little bit. We were really German focused, but let's talk EU here. And that is, let's say, the borders within the EU. Like everybody's pulling in a different direction. We've seen that on geopolitics as well, where France has taken a bit of a leadership role when it came to the Ukraine and nuclear weapon rollout and positioning of nuclear arms, just as an example. But as you said, like maybe we can break that down a bit more. The EU is not a union. No,
it is not a union. We should actually be grateful to Donald Trump that he has reminded us that we have been under the protection umbrella of the US for so long and have not really grown up to be a geopolitical power. We have relied on the US to defend us. We have created the European Union, a great post-war peace project, considering how intensive wars the Europeans have fought over the centuries. So, great peace project. But then we started to quibble among ourselves rather than to fortify the European Union economically as well as politically as a geopolitical factor. And I think with Donald Trump, most politicians, I would say, have realized that it's now time to grow up. Now, we were like little children in the kindergarten, protected by the nanny United States from external threats. And now the nanny says, actually, I'm away. I need to attend other things in Asia. And by the way, there is the big bad wolf circling around the kindergarten, and now the children are upset. We need to grow up. We need to modernize our economy. We need to improve our defense capabilities. It's not that we spend not a lot of money on defense, but so inefficiently. 12 tanks, 12 model of tanks, the USS-1. Just to quote an example, everyone wants to sort of has his own weapon. So these are sort of like bespoken stuff, no scales. So we need to reform the defense industry, and by reforming the defense industry, I think we also can spark technical progress. I mean, what the Ukrainians are just showing in terms of defense technology is breathtaking. So we should borrow a leaf from them, grow our defense industry as it's urgently needed, and to look for technological spin-offs from there. That would be, I think, a path towards the future.
Yeah, defense and space are the two industries that lead innovations.
Absolutely.
In
Look
our
at
industry.
Israel. Look at Israel. Israel has a tremendous technology sector driven by the defense industry, and defense is urgently needed in Israel to survive. And now we are gradually waking up to this new world. So thank you, Donald Trump.
Yeah, it's like the speech of J.D. Vance in Munich was quite eye-opening.
Yep.
It really rattled people's cages and woke people up. It caused some negative reactions as well, because people don't like to be woken up while they're fast asleep here, or in a deep slumber. Right,
that's right.
But it's urgent and it's important. And we had the NATO summit just last weekend, and it seems like everybody's agreed on raising their spending to 5% of GDP. What do you make of that? And let's talk a bit about the economic implications here, Thomas.
I mean, the proof of the pudding is in the eating, of course, as the Brits like to say. So in that sense, I think we need now to really implement these promises. These are promises that are not so hard really to follow. This is until 2035. So when I look around, I see actually some real intention here in Germany to grow the army. I think this is the first time that I see this to be serious. Before that, this was nothing. Under Merkel, we have basically run down the Bundeswehr, run down the infrastructure. Under Scholz, the chancellor before Friedrich Merz, things just moved sideways. He was very hesitant, extremely risk-averse, always hiding behind Joe Biden when it came to supporting the Ukraine. Now with Friedrich Merz, I think we have actually the chance to really grow defense and the defense industry. So from that point of view, I think Germany is gradually converging towards the Eastern Europeans, the Poles, the Baltic states, who have for years said, look, guys, you are not aware of the danger that is at our border. So here Germany is okay. But when you look at France, France wants to grow its defense industry, but it can't because they're over indebted. They have considerably more than 100% debt to GDP ratio, not quite as high as Italy, but coming towards it, and are constrained. Italy, 140% debt to GDP. They have a big constraint. Giorgia Meloni, the prime minister, is saying, yes, we'll do it, but I'd like to say how they do it. And then you have the other one, Spain, who simply says, no, we won't. This is old European Union, no? Right? We won't. We are way away from Russia. Before Russia comes to Spain, it has to get through Germany and get through France. So the chances that the Russians will arrive in Madrid and conquer Madrid is not very big. So the Spaniards said, well, therefore we don't want to have a higher defense budget. This is old EU, right? Thinking in a parochial way, always about your backyard. And we have to overcome this. And Germany has to take the lead on that.
Absolutely. I tend to agree. Like, and that's exactly what I mentioned. Is like internally, we're very divided.
Yeah.
We're not a union, as I said.
Not really.
Like one topic that sort of popped into my head, and I'm not sure where you stand on it, but I'm curious to hear your thoughts, is Eurobonds.
Yeah.
Really interesting topic. Personally, like I'm still very divided on it, whether we as Germany, because you touched on the indebtedness, should be backing bonds for other countries within the EU.
Yeah.
What is your position on that? And maybe explain that model real quick to our audience.
Yeah, I mean, the idea is here to unify borrowing by the Europeans, and you can do this in several ways. You can just take the existing bonds and turn them into joint liability instruments, or you can create new bonds along the lines of the collateralized debt obligations, where you take an equity tranche and a debt tranche, and the equity tranche takes the first hits. And protects the debt tranche, so that you create here a relatively highly rated asset. So that's an idea that has become, again, a bit more popular recently. But the big problem is that it requires a unification of risk. Now you would do this risk pooling, you would do this if you have a political union. A political union allows you to have a fiscal union. The voter has a say in this. But if you do not have a political union, it's constitutionally almost impossible to have a fiscal union. Remember the US slogan, no taxation without representation? So other people deciding on your budget by imposing on you liabilities for what they are doing. So this is an extremely difficult process, and I can see some merit in a limited way in funding common European projects. They call this now European public goods. There are always new terms invented for this to make it politically a bit more appealing. So European public goods, like we did in this EU Next Generation Fund to support countries that have suffered under the pandemic more than others. One could just imagine to have a European defense fund, but on a limited scale. So I would say we can either move forward, create political union, have a fiscal union and Eurobonds, or every country has basically to try to upgrade the rating of their debt so that they can issue more. This requires that countries such as Germany can now take on more debt, but others will have to manage their debt load because they can't take on more.
What is your personal opinion on it? Where do you stand? Are you pro or against Eurobonds?
I don't like Eurobonds the way that they are suggested. There was a big debate recently about creating a European safe asset. You know, the debate about is the dollar now the international reserve currency of the past, and now we need to have a safe asset and so forth. And my proposal was to create at least a short duration safe asset on a European scale. And you could do this by having the European Central Bank to issue interest-bearing bills. That's a possibility. With that, you would have a European institution existing. You would have a balance sheet that is largely filled up with bonds of European Union countries or Eurozone countries, to be more precise. You have a large balance sheet, about 3.5 billion of bonds on there, on that balance sheet. And if the ECB issues currency, of course, we know that. And if they would issue interest-bearing bills, then we would have a step towards a common instrument, a common debt instrument, at least short duration instruments, because the statutes say that they can do this up to 12 months, but at least we would have bills. That would be a way forward that we could do without having big political debates, new institutions, bureaucracy, and so forth. They can do it just by a decision. So that would be my way to address this issue.
Oh, it's interesting. I'm very divided on it. Like, personally, I'm not a fan. Like you mentioned the indebtedness. Just looking at it, like we've really kept our wallets shut for the last few years, and really we're like the German mentality is like save and to keep your money to yourself, right? And now everybody wants us to spend, and maybe take on liabilities that are not
Yeah,
ours. I struggle with that.
exactly. That's the problem. Huh? Taking liability for debt that has not been approved by the German voter. Equally, the Dutch or whatever voters would also say, why should we now be liable for decisions that have been made in France and Italy that have created this debt mountain there? Why us? Yeah, so that's a very, very difficult hurdle to overcome.
100%. And it'll take a long time to get public approval for something like that, I think.
Yeah.
Thomas, I mentioned in my intro that the US dollar has had its weakest start to the year since 1973. Of course, the euro has been gaining. We're at a 117 to the US dollar right now. Dixie is below 97 as we speak. We have to talk a little bit, why is capital moving towards the EU or the euro currency, but also the Eurozone, it seems like? It's a big topic. Like, it's very difficult to simplify. But like, what are some of the trends that you're seeing, and why is the EU or the Eurozone re-emerging as a capital, like a attractive safe haven, or safe haven is a strong word, as an attractive haven for capital?
Yeah, I think there has been more dust, I would say, created in the media than there is substance to it. Because when you look at the developments of the US dollar in the longer run, then it has always moved in a stationary way, the economists would say, like that, without really trending like this or like that. Looking at longer term, what we have seen in the first half of this year is a moderate correction to an upward trend. We haven't even started a downward trend. So I would like to put this first into perspective. This is not a dramatic issue that we are seeing here. It could be a very simple dollar correction. Also, when you look at the recovery of the European bourses, the equities, well, at the end of last year, S&P 500 assets, especially the stocks of the Magnificent Seven, are extremely expensive relative to Europeans. So I think it's natural that investors think about, there is life outside of the US, and they have detected that not all these European companies deserve to be so cheap. So I think it was a normal portfolio reallocation. There is this talk about the flight from US treasuries, US treasuries behaving like emerging market bonds. I don't see this. When you look at foreign ownership of treasuries, it's not plunging at all. In fact, it keeps growing a bit. So I don't think that this is a very dramatic move. What happens is that these, I would say, ordinary corrections in the market come together with a public background which screams out, there's something new. There's Donald Trump. Donald Trump is an isolationist, and he wants to have the dollar lower. This creates the backdrop for all this press excitement. But taking a step back, there is no alternative to the dollar as an international reserve currency right now. The euro is an unfinished currency, I call it, because only the European that the euro builds are of the same credit quality. The deposits of the European banks are only as good as the deposit insurance, and the deposit insurance is still the obligation of the states, and the states have very different financial capacities. So in that regard, the euro is not complete. How could an incomplete currency take over from the dollar? So that, I think, is exaggerated. And also the safe asset issue is exaggerated. Look, the Bund market, German bonds, this is the safe asset in the Eurozone. The treasury market is 16 times the size of the Bund market. How can you possibly reallocate treasury holdings as safe assets over to bonds? Impossible. No? So from that point of view, I think there is a lot of talk about the decline of the US and the rise of Europe, but I think it's a bit overdone. It's a rejigging of the chips, if you could call it like that, but it's not, I think, a really breaking point that we experience. That's at least my take when I look at the markets and what's going on in the economies.
I think Europeans, and I see it here in Germany, we're quite emotional towards the US right now and towards its president. Hence, certain reactions probably in the marketplace. And I think it was a Danish fund, retirement fund manager, or pension fund manager is the word I was looking for, who said, we're done investing in the US. We're not being treated well here, which leads me to the question, is capital potentially being treated better in Europe than in the US right now?
I can't see that. There has been this Section 899 has been hyped up. This was a section in the so-called Big Beautiful Bill, which would have given the U.S. Treasury a possibility to impose a tax on countries that are unfriendly to the U.S. in terms of fiscal policy or tariffs. But that has been, I think, watered down. We shall see what comes out of it. But that was an excitement which I think is dying down. Other than that, when you look at the U.S. capital market, it is just so much bigger. There are so many fewer hurdles than in the European market, so that despite all the concerns that you may have of the US, and I have them also, I mean the growing debt, the inability even in boom times to bring the budget deficit down, which is not necessarily now started with Trump. This was already with Biden an issue. So there are concerns about the US, but I don't think that this is creating now a big shift out of the US and into Europe.
Thomas, I have one last topic we need to tackle real quick, is really the tariffs. I mentioned earlier, I'm hearing rumors that the US and Europe are willing to agree on a 10% flat tariff with a few exceptions. What is your take, and what do you think the economic impact on the Eurozone will be?
I mean, as an economist, you would not be surprised when I say that tariffs are never a good thing. I mean, we know since David Ricardo that tariffs hinder economic trade, and when trade is hindered, efficiency declines. So tariffs are not a great thing. But having said that, if we indeed settle with the 10% tariff, I think this is something that the economies and the market will digest. Look, I'm always asking myself, what would the Europeans have said if the US had imposed a 20% value-added tax? They would have said, okay, finally the US is coming to our system. With the 20% value-added tax, you would also have added 20% to the imports that you do. Of course, your domestic sales would also have been taxed with that, but that would have caused little excitement in Europe. The US would have just become a little bit more like us. Now we have 10% tariffs. They are only on imports. This is not an additional tax on domestically produced goods. But in the end, I think it is not nice, but I think the economies and the markets can live with 10%. The fear was that it would be 50% or something like that. 10%, I think, not great, but we can live with it, I believe.
Fantastic. Thomas, what a wonderful conversation. It was great to have you on. Where can we send our audience? Where can they follow some of your work?
Well, they can go to the website of our institute. It's called Flossbach von Storch Research Institute. If you Google it, you'll find it.
Fantastic. Thomas, really appreciate you coming on this morning. It was really, really, a really insightful conversation. It was refreshing to talk from a different perspective for a change, and we'll have to do this again soon. Perhaps after the summer, we'll see whether the tariff dust has settled until then. So really appreciate it, Thomas. Thank you so much. And everybody else, much appreciate you tuning in. I hope you enjoyed this conversation with Thomas Meyer. I tremendously have. Really great insights from a very different perspective than what we're used to here on Soar Financially. If you like this conversation, leave a comment, leave a like down below. And if you haven't done so, hit that subscribe button. It's a free way to support our channel, and we much, much appreciate it. Enjoy the summer. We'll be back with lots more shortly. Take care out there.